And welcome once again to the Mark Osler Retirement Experience. My name is Randy Cook. I'm here each week with Mark as we sit down here and talk about some of the things that are going on in the world of Wall Street and all the headlines and the red arrows and the green arrows that you see. But really what we want to do is talk to you personally about what are you feeling and what are you doing to get ready for retirement. It's a big jump to go from working every day to not working every day, and then replacing that paycheck. And that's really what we want to talk about here and try to help you with that. And if you don't have anybody in your life right now, I want to introduce you to Mark Osler. Mark, how are you doing today?
I'm fantastic, Randy. What a great day we have here. And I'm just looking forward to having some good financial talk with you.
Well, we have no shortage of things to talk about because it's been a very busy week. So we've got trade deals, a deal with the UK. They backed off on the tariffs on China. The inflation rate came out, and that was down just a tick. So that's a good piece of news there. The market surged on some tariff news, went up about 1,000 points earlier this week. So what do you make of all this? Are you having clients that are calling you saying, Mark, what's going on here? What are you hearing and what are you doing right now?
Well, it's just so funny because I got tons and tons of calls when we were looking at April 3rd through April 10th. Mm-hmm. And I got calls after that too. Now the market with the surge and a little bit of a comeback based on some of the tariff news has changed. I'm not getting those calls. I'm getting other calls. I'm getting other calls about just retirement planning, information, in terms of, do I think this is going to return as much as I expect it to return? So I'm getting more of those questions, Randy, but I'm not getting those questions. So I'm actually reaching out to the folks that called me during that time and saying, how are you feeling right now?
Gotcha. One of the things that we want to know is, is this a long-term event? Is this a short-term event? I mean, the way things are going in the White House, where we're back and forth with trade deals, we've got a deal, we don't have a deal, we pull back on the tariffs. The market is reacting pretty daily, hourly, by the minute to all this stuff. We can't really do that with our retirement planning, can we? I mean, this is one of those times where emotions, we kind of have to try to set them aside, don't we?
We do. I mean, these are volatile times. If somebody told you that what we're witnessing over the course of the last month and a half or so is not volatile, then they don't know what they're talking about. We obviously are seeing crazy volatility. We haven't seen stuff like this in a long time. So obviously, when you're in retirement, or maybe you're coming up on retirement and you're making plans, maybe you want to make some specific plans. It just depends on what type of risk you want to take in retirement. And I'll say this, it's not a great idea to take too much risk when you're trying to work off a fixed bucket of money.
Mm-hmm. One of the things I'm going to skip over here to this one story here. We're going to do this in a second, but I think we should do it right now. When we look at people on Wall Street or some of these big names that are out there right now, I'm going to throw a couple at you. Mark Zuckerberg is one. Of course, he's the head of Meta. And before all this stuff happened, he sold a whole bunch of his shares. And then Jamie Dimon, who's the head of JP Morgan, the big bank, he sold a whole bunch of his shares. So that article was in one of the publications and saying, gee, look how smart these guys are. They saw something coming and they made a move. And I don't know about all of that, because I also heard a story of somebody in the first 2 weeks of April who went to their financial advisor and said, get me out. And the guy goes, I don't know that I'd do that. And he said, get me out. And he went to cash. And the next day, the market went up 3,000 points. So let's talk a little bit about the reaction. We talked about emotions, the reaction that people have, going to cash, getting out of the way. I'm nervous about this economy and all this stuff. What's your message to somebody like that?
Well, my message is in terms of who you are, tell me, Randy, we are all different people, right? And we look at our situation and we look at our financial situation and we try to understand exactly what we want to be like in the future, but we know who we are right now. And you need to own that fact. And it's really important, because if you own who you are, you can kind of figure out where you want to go from this point. So what does all that mean? Well, I'll step back and I'll say this. I don't know how smart Mark Zuckerberg is with regards to finances. I'm sure they get information. I won't go any further than that. Mm-hmm. But I will say that Jamie Dimon is a very smart guy, and he's one of the economists that I do follow. He's highly intelligent. I follow his theories because they've come true before in the past. So I'll say this. When I look at these things, I love to study the economy because it has a lot to do with what decisions I make when I talk to my clients. I'll give them some certain advice, we'll just say. And I'll say, you could do this or you could do that, and I have suggestions for them. But it's always based on risk tolerance. That's why we run a report first for people. We identify, is your level of risk the same as what you're taking right now? And if it's not, what can we do differently? So, Randy, we know that we do market money, right? We know that I'm one of only 300 advisors in the country that can use a group called Market Guard, right?
Right.
Okay. But there's also other things out there. You can also do alternative investments within your portfolio planning, like structured notes that can kind of beat up the correlation or things moving in the same direction. So this way you're not so highly correlated. But there's also things we could do like fixed indexed annuities, income riders through annuities. So when I talk about those are preservation tools. So when you ask me all of these questions about where the economy is going, the volatility, people pulling money out of the market, trying to time the market, we're not doing that here, Randy. We're looking for sensible ways to manage people's money and give them good, helpful suggestions during their retirement years.
Well, it was interesting to me that the take from this article was, look how smart these guys are. They got out of the way of all that volatility. But another take on that is, if you were in retirement and you wanted to buy a car, you would probably go into your 401k or you'd go someplace and you'd get that money. There's probably periods throughout the year where Mark Zuckerberg does the same thing, and probably some times during the year that Jamie Dimon and all these rich guys do the same thing. They'll sell millions of shares, and it's not necessarily because they have some insight into where the future of the market's going. It's just that's what they're doing to be a businessman, and maybe it was as simple as that. It was time for them to sell, and they were on some kind of a schedule to do that.
That's right, Randy. And that's the thing. We don't know. Maybe they're buying some real estate. I mean, right now, there's opportunities popping up in commercial real estate, and it'll probably continue because we talked about that before. There's approximately $2 trillion of commercial real estate notes coming due from the year 2024 through 2026. So we know that comes with opportunity as well. Well,
one of the things about having a financial advisor in your life is to be able to bounce some of this stuff off of them and to say, okay, market's going a little crazy right now. What is this doing to me? And it makes me really nervous. And maybe that means to you that, and it should mean to you, that there's a red flag going up. Hey, you've got too much risk. If you're losing sleep and walking halls at night, there's no reason for that. Let's sit down and have a real strong and a conversation about how much money you have in the market. And if you aren't comfortable with it right now, let's get you to a place that is more comfortable. Here's our number and here's our website to start that conversation. MoreToRetire.com. Pretty simple. MoreToRetire.com. Down at the bottom of the page is a place where you can put in a little information. Mark will reach out to you and say, okay, what's on your mind? How can we help? It's basically that. You can also call us at 984-300-1984. 984-300-1984. Now, one of the other big stories that has happened very recently is Warren Buffett at the age of 94. I'm trying to figure out what age I'm going to retire. It sure isn't going to be 94. But he said he's going to retire from Berkshire Hathaway. He's stepping down. And when I think about Warren Buffett, I think about a couple of things that he continually has pounded over the years. Number one, if you're going to buy a stock, do your research. Know what you own. And because of that, he says he holds on to his stuff for a long period of time. He's kind of a buy and hold kind of guy. Don't let your emotions or your political viewpoints get in the way of your investment decisions. And then the last one, of course, what's rule number one of investing? Don't lose money. What's rule number two? See rule number one. So what do you think about, just give me your impressions of Warren Buffett as kind of an icon in the financial world and what he has kind of espoused here in his way of investing. Does it still hold up today?
I think that there's several levels of what he's done that holds up today. Warren Buffett is a highly intelligent man. I mean, he's built an organization that off of owning several companies, and which, let's just say, he's helped a lot of people become rich, right? And so when we look at this and we understand he's trying to help people identify what they can do and how they can make a difference. So, if you're young, yeah, buy some good stocks, buy some ones, that you believe in. I'll give you an example. Apple's a good one to own because, I'll buy Apple simply because my kids have iPhones, right? Or they want to work with all the Apple appliances. When we think about those things, that makes me want to buy it. I own an Android. Watch out. But I still invest in Apple. So just for example, buy and hold certain stocks, that's a great idea. Now, we are actually active advisors. So we do actively manage portfolios as opposed to passive. So that means that there are things that adjust, change, and shift throughout. Now, if it's pure equity, those stocks could shift and change daily. And if it's ETFs, not daily, but it does change. Maybe sometimes weekly, depending on the volatility. So when we look at what a person wants to accomplish, it doesn't necessarily mean it's going to fit all the rules that Warren Buffett has in place, because it might not be. It depends on your age, it depends on your risk tolerance, and it depends what you want to accomplish. I know Warren Buffett was a big fan on covered calls as well. So again, when we talk about levels of investment and then your level of risk, that level of risk in that report that we run tells us everything we need to know. But I do think Warren Buffett is a highly intelligent man. He has kept Randy, this man will go out and have a steak dinner, and then he'll go get some Dairy Queen. He'll have a cherry Coke, and he's not dead. Okay? Yeah. It's amazing. In fact, his brain seems to work off of it.
He loves McDonald's. Yeah, I know. Well, one of the things about Warren Buffett is perspective. I mean, he made his first investment when he was 11 years old in the 40s. So he's seen all these presidents. He's seen all these politics. He's seen all these economies. He's seen the 50s, the 60s. He's seen the 70s with high inflation. He's seen going through 1987. He went through 2000. He's gone through it all. And I think one of the things about sitting down with someone like you, Mark, is somebody who has the perspective of seeing all these different retirements. You've been helping people for years, and you've seen people come in and made mistakes. You've seen people come in, and I don't want to have anything to do with this. I just want you to do it. You've seen a lot of different ways that retirements happen, and I think that benefits everybody who walks through your door.
It does. And number 2 rule by Warren Buffett was what? Emotions. Don't have emotional thoughts or stress or anything like that with regards to your investments. It's all about educational. So even when we use Market Guard, it's the science of knowing. So there's no emotion involved, and you can't have emotion involved. I had a client call me because they were in the pure equity model. And I said, hold on a second. Now, you have all of these annuities with income provisions, growth provisions, and then we have just this little bucket of money over here, and you just want to take some risk with it, and you want it to be slightly aggressive because it's a very small portion of your portfolio. And now you're calling me because you saw that things kind of shifted so fast. Wait, hold on. And guess what? Things are all right now. They're okay. And they've adjusted, shifted, and changed. And that's what we have to identify when we look at these things. Pump the brakes, watch the emotions. If you're going to talk to me, it's all about us using our brain. And truly, Randy, I pray about the things that I do. It's very important to me. It's a part of who I am.
Well, Warren Buffett just recently, when he retired, somebody asked him about the market right now, and he wasn't very shook about it at all. He basically said, that's kind of the price of admission. If you don't like what's happening right now, you really need to look at yourself and say, do I need to be in that market at all? And if you want to look at Mark and say, I don't like risk, I'm conservative, I don't want anything to do with that blackjack table, that's okay too. Give us a call. Let's sit down and talk through it. Find out what you want to do in retirement and how we can help you put the money with it. Moretoretire.com is our website. Moretoretire.com. There's a place down at the bottom of the page where you can put in a little information. Mark will reach out to you. Let's start the conversation about you and your retirement. You can do the same thing by calling us 984-300-1984. 984-300-1984. So let's talk a little bit about what people are concerned about when they sit down with somebody like you. AARP now has 38 million members. That's all these baby boomers who are getting closer to retirement, and they just send us one of those cards in the mail when we get 50. And I don't even know if I want to be there. But the CEO of AARP was on CBS Sunday Morning, and she said, this is what people are most concerned about when it comes to their clients.
Our members are most worried about Medicare, Social Security, and family caregiving. We're hearing more and more from people who are in the sandwich generation, taking care of younger children, taking care of their aging parents, and the financial hardships that can bring.
So, Mark, we've just talked about the market. The market, to me, is something I can't control. Medicare and Social Security are going to be a big part of most everybody's retirement, but they're government programs. And they're also things we can't control. We're constantly getting changes about Social Security and changes to Medicare. I mean, they're fighting this out in Congress right now. So these are programs that we depend on. If they're all over the place, how can we build a retirement plan to deal with not only the changes, but whatever we get at the end of all of this?
You know, Monday night, I actually talked to a guy, and he basically said, I'm not relying on Social Security because I just don't trust it. So it's just going to be like gravy to me. And I said, you know what? That's a really smart guy. So we can plan around Social Security with certain parameters, but we know, Randy, that if they don't correct what's going on right now with regards to the debt on the Social Security system, that the trust fund itself would be exhausted by around 2033. And if that was the case, we know that minimally it would affect everybody's Social Security by about 20%. And that could hit home on a lot of levels. And I don't think they want that to happen. And there is always changes to Medicare and then supplemental policies and things like that. Being educated about this stuff, we bring the education to you. So if you're looking for information about that, yeah, I'm licensed for those things, but I also sometimes outsource certain things as well because people spend more time on that, and that's okay. But what we do is we bring in groups of professionals to work with you from every single level of planning. And my professional level is investments, retirement planning, retirement strategies, income planning. And then when you get into tax advantage strategies, sometimes we have to bring in some tax professionals and then sometimes some estate planning too. But these government plans, you don't want to fully rely on them as a majority of what you're doing in retirement.
So I always talk about how we have that conversation in the conference room about our retirement. And I think starting your questions with what if is just a really good place to start. If you're worried about Social Security and say, well, what if they cut it back? And I only get 20, they cut it back by 20%. Am I going to be okay? What if I move money or I do a conversion and all of a sudden my income goes up and then my Medicare premiums go up? What if? The what if questions are probably really good ones to sit down and talk through because that gives you all the scenarios. And if you've got the scenarios taken care of, I can feel a little better and more confident in retirement. Give us a call. Give us a look on our website, moretoretire.com. Down at the bottom of the page, you can put a little information in there, name, email, phone number, and Mark will call you, and then we'll start a conversation and get that concern out on the table right now. Am I going to be okay? Am I going to run out of money? What am I going to do with my 401k? I'm concerned about Social Security. You got a bunch of questions. Let's get them answered. moretoretire.com or 984-300-1984. 984-300-1984. So we're coming up on summer. We got, Memorial Day not long after this, and we've got, that's the official start of summer. And I always say, you don't want to call your accountant on April the 14th and expect to get an appointment. But if you want to give us a call in the summer, this might be a really good time to sit down and talk about your retirement. And Mark, as you sit down with people, what are you looking for? You're looking for what they've done, what their concerns are, who they are. Talk me through, we're just going to sit down and get a real good temperature of where you are right now and how we might be able to help.
Yeah, I really want to know, if you're new to me, I really want to know who you are. Mm-hmm. Your makeup, what you want to do in retirement. You know, if you have 10 years or more before retirement, what are we going to talk about? Because I think I've even mentioned in the past, if you do have 10 years or more before you retire, there are tax advantage strategies like life insurance that you could add to your portfolio where there could be some tax-free income in the future when you retire. You know, that's based on the Internal Revenue Code, but just making sure that everything works out that way and is done properly. But that's one thing that you can do in terms of Roth IRAs. Are you looking at doing conversions to Roths? I need to know who you are. Can you handle a certain amount of risk? What kind of tax strategies do you want to use, or do you want to just implement the lowest possible tax bracket? All of this stuff is extremely important for me to identify. Are you going to travel early in retirement? Are you going to travel throughout retirement? What kind of bucket of money do we want to put on the sidelines for these things and these purposes? So just identifying who you are when you come in. And then also, are we a fit for each other? I usually can figure out after 1 or 2 appointments whether we're a fit for each other, and you can too. So we'll talk about those things. Now, the clients that I do have, I already know them, but guess what? Things change in life, and they always change, and that's okay. We're going to adjust, shift, and we're going to give you the ongoing support you need. And that's why I'm here, Randy, because I want to identify who a person is now and who they also might be in the future as well. And that's really important. That's why having, annual reviews and maybe even sitting down twice a year, just depending on what a person's done and if they need to make some adjustments, shifts, or changes.
I think that if you don't have a financial advisor in your life, anybody helping you right now, you might be listening to this show and saying, I wonder what I'm missing. Maybe this guy has something that I'm missing. If you do have a financial advisor, you might be saying the same thing. I wonder if my person is missing something and I need to have a second opinion. You can do that. Give Mark a call. Let's sit down and find out what you're missing and maybe what's working, what's not working. Maybe you saw your accounts go way down, and maybe they even went down further than the market went down. There's an indication that something might not be working within your portfolio. Give us a call. Give us a look on our website, moretoretire.com or 984-300-1984. Mark, you mentioned to me, we talk about you doing live events and things like that. You've got a book signing coming up not too long from now. Tell me a little bit about what's going on there.
Absolutely. It's a really good friend of mine. His name is Dennis Lindsay. And Dennis Lindsay wrote a book called The Lens of the Father. And it's a great read. And he's going to be at my office on Saturday, May 31st from 10 to 12. So it'll be floating. You pop in, you come meet him, get a signature on your book. And we'll probably have some books that we could sell right here, but you can find his book, The Lens of the Father, on Amazon as well by Dennis Lindsay. Dennis is a great guy, but this is going to be a great time. And so if you have been listening to me on radio and you want to pop in and meet me in person, get to know me a little bit, come on by Saturday, May 31st from 10 to 12. My address here is 919 Kildare Farm Road, Suite 1-B. So May 31st, 10 to 12, 919 Kildare Farm Road, Suite 1-B. And if you can't remember 919 Kildare Farm Road, then we have some other issues.
Well, it's all on the website as well, and you can check that out at moretoretire.com. All right, so I think last week we did a story about the retirement MVP, and that was the Roth IRA, and we talked about how great that is. Well, I found another story about what could be the MVP. A new survey from the Employee Benefit Research Institute found that 78% of people believe they're going to have enough money for retirement. They're feeling pretty good about it, and 70% of those people said one thing that makes them feel good is having guaranteed lifetime income. So, Mark, I always ask, what's the moment in the conference room where people kind of lighten up and go, you know what? Maybe this will work. And I got to believe that when you figure out what the paycheck is and the money coming in, that's got to be one of those moments, isn't it?
It is. And I'll be honest with you, Randy, there are advisors that only focus on how much income a person's going to get in retirement. And that's just simply not what we do. We just try to figure out a level of income that you're going to make sense for your retirement in terms of what do we want coming in and why do we want this amount of money coming in? And we do this because if we give you too much income, it's just going to go into the bank, right? So there is such a thing as too much income, obviously, because then you might be paying more taxes on it as well. Mm-hmm. So what we're going to do is figure out, do you need guaranteed lifetime income like an income rider on a fixed or fixed index annuity? And that'll be part of what you might do in your portfolio. But there are other ways to do that as well, Randy. There are ways where maybe we can get some certain rates of return that we know are sensible, and we stay within certain parameters where we get you the income you need that way as well. But I will say that the folks that are selecting some type of guaranteed income, whether it's through a current pension or through it's an annuity, whatever it might be, Randy, could be a difference maker. And that's what gives people a level of comfortability because they don't want to run out of money. Nobody wants to run out of money.
So when we talk about retirement and where the money is coming from, there's a couple of places where you can put your money. People ask me all the time, Randy, where do I put my money? You work with Mark. Tell me where I should put my money. Okay. So there's really only about 3 places where you can put your money. You can put your money in the stock market. You can put your money in a bank, or you can put your money with the insurance companies. I mean, that's really it. I mean, maybe real estate is something else that you could look into. 4 places that you can put your money. Do we have to have money in all 4 places, Mark, in order to have kind of a level playing field and be diversified? Would you say that to somebody? Or at least we should explore all 4 different areas?
I'm open to exploring all 4 areas because it's just good to have that conversation and understand. Some people, though, they don't want to have real estate. They don't want to do the rental properties, and some do. Some are like, oh, I love this. I want to do this. This is going to be exciting for me. And others might say, no, I don't want the hassle. I don't want the burden. And so it just depends on the person's risk tolerance. I have clients that solely have annuities and bank money, and that's their level of comfortability. And for me, when I look at it, I say, okay, for me, if we do have market money, how much market money do you want and why? And do we want to reduce this over time? Also, are we planning for inflation as well? Planning for inflation is extremely important because there's no normal inflation out there. We've realized that with the massive inflation we've gone through over the last few years, right? So for me, just making sure that we have, let's just say, where you're diversified, how you're allocated, and if you're fit for massive diversification, money all over the place, or if you want to hedge in one area versus another.
Yeah, we have to figure out who you are as a person. Marcus said that a couple of times on the show today. And maybe you're a person that doesn't want any market money. Yeah, all this time, you've never bought a stock in your whole life. Why should I do that in retirement? I get it. And let's talk about that. Let's talk about where you can put your money, giving you the income, the protection, the growth that you need. Here's our number and our website, moretoretire.com. moretoretire.com. Bottom of the page there's a place for you to put in a little information. Mark will give you a call and say, okay, how can I help? What did you hear? What was interesting on the show that you really want to talk about? Let's see if we can solve that problem for you. Or 984-300-1984. 984-300-1984. So I tried to find a place where most people claim Social Security and age. Most people claim it right about the time they get to be 62. A lot of people do anyway. About 30 to 40% of people, right away when they get to 62, that's when they file for Social Security. But what's interesting to me is a lot of people, if you tell them, hey, the longer you wait, the bigger your check, they don't care. They just basically say retirement and Social Security go together. So when I retire, I'm claiming my Social Security, whether it's 62, 65, 67, whatever it is. So I want to ask you, Mark, is a make or break decision on when you take your Social Security? I've heard people say it's the most important thing you're going to do in retirement. I've had other people that say, not so much.
I've come across advisors in the past that think it's key to the planning. So they'll talk about when the person should take Social Security. And they're also usually the same advisors that say, I'm going to convince you why you should do Roth conversions. Well, Randy, I'm not the convincing advisor.
Okay.
I am just simply here and open to a level of treatment and thought for what you're asking me to do. And sometimes you don't know what to do. I can give you some guidance and some healthy suggestions to help you get to the point of where you want to be. So for me, when I look at when you turn on Social Security, the first age for people at age 62, that's what's happening to be the most common. People will ask me, should I take it at 62? Well, that's a loaded question. Let's just look at the numbers and figures and talk about it. And usually over time, let's just say you take it later on at 67 or 70 years old, it usually takes somewhere around 12 years for you to get back to where you would have missed out on. And then it becomes gravy at that point. And that's great if you want to do it that way. So some people pride themselves on waiting to 70. If you feel like that's the best thing for you, that's great. There's a lot of people that usually age full is around 67. That just simply means if you're a worker bee, you can have as much earned income as you want and turn it on at your age full, which probably is around 67 years old, and you won't get that little Social Security penalty, right? Mm-hmm. So for me, Randy, it's just different.
And it needs to be a decision that you come to with a lot of data. I mean, if you want to take it at 62 because you need it, well, that's it right there. You need the money, so you can go for it. But if you took it at 62 just because you want to invest the money, well, that's a different conversation. And Mark, that can affect a lot of other things as well. So taking it right away has its ups and downs, doesn't it?
It does. I mean, the first question I ask at 62 is, what are you going to do about insurance? So, there are questions like, well, if my income's low enough, I can go to the marketplace. Well, my wife has, she has a pension and we have her insurance and I'm on her insurance. Great. Okay. We have certain answers. Oh, I have this lump sum of money that I'm going to use to pay for the insurance during this period of time. It's part of my plan. Okay. That's great. Now, we also know when you hit 65 years old, that's a common age. That's the second most common age people do it because they know they can get on Social Security and Medicare at the same time. Mm-hmm. That makes sense too. That's actually a very logical way of looking at things. So we want to make sure, and then I talked to you about age full as well, and that's where you can make as much income as you want. What I always tell you is if you don't know these numbers, and I want to identify all this. So when I run the financial report based on your positions, whether it's a 401k, sometimes a variable annuity, or maybe just market money like mutual funds, ETFs, stocks in general, we run those reports for a reason. But I also ask you to go on SSA.gov. If you go to SSA.gov, you can get your Social Security information and you can get an idea of what the future looks like. And that'll help me answer some questions too.
Yeah, to know that if you take it early and you're not going to get as big a check, you're going to get penalized to a certain point there. But at the same time, if you're trying to give yourself a raise, if you're still working and you try to give yourself a raise, did you know that for every two you make, you may have to give one back in taxes? And Mark, that might be a bit of an eye-opener to a lot of people too.
It does. I mean, obviously, you don't want to pay more taxes than your fair share, right? So Uncle Sam's already pretty fat and happy. Wouldn't you agree?
I would say so.
Absolutely. But the problem is taxes probably at some point in the future are going to have to go up in some fashion. Mm-hmm. And we might have to create some other taxes just simply because of the massive debt the country has. Now, I know they're trying to work it off in other ways, and that's great, but it's a large debt. And so this is always another topic of conversation we have is what tax level you want to be at. And if you're turning on Social Security early, guess what? There are a lot of factors that come into play, and we just need to have them all on the table to see what fits your situation.
And this is why I say over and over again, to be able to sit down with someone like Mark and go through all the pros and the cons of all these different decisions. You hear this stuff on programs, on TV, you read it, and you wonder, hey, is this right for me? Well, why don't you give Mark a call and find out if it's right for you? Let's run the numbers on this. Moretoretire.com is our website, moretoretire.com, or 984-300-1984. 984-300-1984. Of course, our appointment is at no charge. We would love to have the opportunity to meet you, learn more about you, and find out if we can help you in your retirement planning. 984-300-1984. Well, as we boomers move toward retirement, many are already there. Others are getting there. And many of us are going to bring a 401k in because in the 80s, that's where, pensions started going away. And they said, well, we're going to give you this new thing. It's called a 401k. That's where you put your money. Okay, here we are. We're at retirement. What do we do? Okay. So, Mark, there's a lot of different options here, and many of them come with their pros and their cons. So let's talk about first, I'm going to leave my money in my 401k, and I'm going to take it as I need it. Let's look at that option right there, the ups and the downs of that.
Absolutely. And I have folks that I know that do that. And I try to at least convince them to look at doing some investments with me, just simply because if you want to keep your money in the market, we can open you up to pretty much everything you're looking for. If you're in a 401k, you're limited to what they offer. Okay. So that's one of the things. That's one of the problems. And so if you're going to keep it there, you're limited to what the plan offers you. Right, Randy?
Mm-hmm. Okay. Also, you are not only limited there, but you're kind of held hostage to whatever fees are involved with your 401k. And now this might be a light bulb to you. What do you mean fees? Yes, there are fees in your 401k, aren't there?
There are fees that are built in. You've got some fund fees in general too. And so if they're mutual funds, generally the expense ratio can be a little bit higher in mutual funds than ETFs. And so we look at that. That's a cost involved. Sometimes in terms of rolling the 401k over somewhere else, there could be a fee there involved as well. But there are fees, there are internal expenses and things like that. Now, you might not be paying an advisor to manage that money, but you're paying an internal fee and you do have some limitations.
And one of the things I know about myself and probably many of you, that you probably put your money in there at a risk level your whole life and, 80%, 90% market, maybe even 100% market. And then for you to say, I'm going to go in retirement, not touch this thing other than taking money out, your risk level might not really be where you should be when it comes to your retirement in that 401k. That's probably something you should adjust.
Absolutely. And that's one thing that really, really comes up. So if you are living off of a fixed amount of income, and let's just say all of your money's just sitting there in the 401k, I wouldn't advise that, because if you're pulling it from the 401k, we're going to have ups and downs. That's typical. But Randy, let's think about the last two recessions we had. The recession for 2000 to 2002, S&P high to low dropped 49%. And 2007 to 2009, it dropped 56.5%. So after it started coming back by 2006, when we had another recession that hit again, let's just say somebody comes to me and they say, I have money in SPY, right? If you got money sitting there in SPY, if we had any kind of normality of what happened from 2000, and it's not normal, but anything like 2000 to 2013, you wouldn't have made a dime, right? Mm-hmm. Mm-hmm. And that's not necessarily wanting retirement. So if you're sitting in a 401k, you have probably very similar volatility, and you probably have things moving in the same direction. If we did have a correction and a full-on recession while you're pulling money out, that could be what we call the double whammy, and that's not something you want to happen in retirement.
You're listening to the Mark Osler Retirement Experience. You can find us online at more2retire.com. If it's time to talk about your retirement, give us a look on our website or call us at 984-300-1984. All right, so 3 things you can do with your 401k. You can leave it there, or you can roll it out into your own IRA. So, Mark, explain what a rollover is, moving it from one place to the next, what we have to do and what we have to watch out for.
So, first and foremost, let's just say you had a Fidelity 401k. Well, we use Fidelity as our custodian. If you had to do that, then you don't have to do a paper check rollover. Basically, we can do an internal rollover at Fidelity where we would call them up, we would go through the process, we'd open up an account, and then they would go ahead and say, okay, we can roll this straight into this account, within a week. And that's a process, and it turns into a traditional IRA or rollover IRA, as we know. And we manage those funds based on what we've agreed to do, based on the certain parameters. Now, sometimes people will just roll them over to my Fidelity account, and then sometimes we'll turn around and put some of that money towards an IRA within an annuity. Because you want some income or you want some safe growth. And so we look at certain levels of where we're going to put the money. We could always start with just a simple rollover.
There's 2 different kinds of rollovers. There's a what they call a direct rollover,
right?
And then there's an indirect rollover. Explain those 2 things.
Thank you for bringing that up. That's a fantastic point, because back in the day, we did so many indirect rollovers, and I have not done an indirect rollover in a very long time. Okay. Indirect rollover is where somebody's just getting their money out of a 401k, and it comes to them in their name, and then they have 60 days to do something with it differently and roll it back in. Now with that, then you have to show the front and the back of the check, if you re-endorse the check where you're sending the money, or if you put it in a bank account where you put it and then where you send it to after that. And you have to prove all that stuff to the IRS. A direct rollover is a lot easier. Like I mentioned, that Fidelity transaction, but let's just say you were with Schwab. We would call them up and they would submit a paper check to you, but it would be made out to the institution like Fidelity, or if it was an annuity with Athene or someone like that, be made out to them for the benefit of you. Those are direct rollovers. Those are a whole lot easier, and we don't have to prove those to the IRS. You get a 1099-R, shows there's no taxable amount. It's a lot easier.
And that's key, that this is a non-taxable event. When you're going from one retirement account to another retirement account, there's no taxes involved there. But if you were to hold that money to yourself, if they were to write you a check and say, Randy, here's your 401k money, and I were to forget about that on day 61, all of a sudden that goes onto my income, and now I got a real problem, don't I?
Yes, and you don't want that to happen. I mean, if that happened and you have this massive tax hit, what could that do? I mean, the level of stress when you've worked your whole life to have this lump sum of money sitting there as a nest egg that you're using, and you might need to use at a certain level, and then you get hit with this taxable event, it could be very drastic.
You're listening to the Mark Osler Retirement Experience. You can find us online, moreToRetire.com. We're talking in this segment about 401ks. Many of us are going to go into, this is going to be our biggest retirement asset. Don't want to make a mistake with it. So you could hold on to the money in the account that it's in. You're comfortable there right now. You like the investments, and you're going to peel money off as you need it. Well, that's one way to do it. Another way would be to roll the money from your employer account over to your own personal account. And then the third thing to do is, we kind of covered a little bit of this, is, hey, send me the check. Just send me the check. But you're in for a tax bill there if you say send me the check, aren't you?
Yeah, if you asked for the check and it's just made out to you and you don't roll it, you're going to pay taxes on it. Mm-hmm. And that's not something that's favorable. Obviously, unless you have an idea where you're just going to sit there and do some Roth conversions. If a person wants to do Roth conversions, that's what we do. We get the data, might talk to your CPA, discuss certain parameters, and just make sure we do it to your level. But if you're asking for the money outright and you pay the taxes on it, and let's just say for example, Randy, I'm managing the money. It's a big IRA. It's like $300,000. And a client's like, yes, I just want the money. Randy, if I do that, I'm going to also have you probably sign a legal document to hold me harmless in a situation like that.
Yeah, you're going to get a tax bill and you're going to go boing like the cartoon characters where their eyes go bugging out, and it's not a good day, believe me. All right, well, let's you just touched on that a little bit. There's a difference between a rollover and a conversion. A rollover, as Marcus said, is moving it from one place, your employer plan, over to your own personal plan. Then there is a conversion. This is where you move your money from an IRA or a 401k, and you're moving it to a different kind of an account. That's a Roth IRA. Mark, explain the differences there and how that can help and what might be the pros and cons of that.
Yeah, one of the things we talk about is required minimum distributions, and you've brought this up many times on the show, and we know that some people are on a level of age 73 will be the RMDs, but if you're born 1960 or after, then we know it's not till 75 years old. Well, this is a factor if we're going to do Roth conversions. So if we're going to convert IRA to Roth or move some 401k over into a Roth IRA as opposed to directly to an IRA and do these conversions, then we have to strategically do them based on your tax brackets and things like that, involving let's say even a tax attorney as well. So it's really important to identify what you want to accomplish with that, because when you get to RMD age, if you still haven't converted everything and you're still trying to convert, the government's going to require you to take your required minimum distribution first that year before you do any more conversions. And so that's another thing that pops up as well.
There's a lot of different rules around this. The tax code's about 75,000 pages long, and I don't want to go through that. Do you? Let's let Mark do that. Let's let those guys take care of all that. Give us a call. Let's talk about it. Your 401k is an important part of your retirement. You're going to want to treat it with a lot of strategy. You're going to want to have a good grasp of what the ups and the downs are of each of these different strategies we talked about. That's part of the conversation with Mark. Give us a call. MoreToRetire.com is our website. You could start right there. Do a little research on Mark, and you're going to see the 5 steps to retirement, 5 steps to more, as we say. And we'll sit down and go through that. And then we'll also sit down and say, what is concerning to you? What do you want to have solved here? Are you worried about running out of money? Are you worried about your 401k? Worried about taxes? Worried about all these different things? Let's see what we can do about that worry. Give us a call. Give us a look on the website, MoreToRetire.com or 984-300-1984. We talk about having a financial advisor, and a financial advisor is somebody who's going to concentrate, like Mark does, on retirement and taxes and investments and all that goes along with that. There's also something called a financial coach. And those are people that can help you maybe pay down debt, give you some advice if you want to buy the car or lease the car, giving you some financial education about what the markets are all about. 2 different kinds of approaches. But, Mark, I got to believe that you have to fit both those roles. Do you find yourself being the financial advisor, but also in many cases helping people kind of coach them along through all of this?
Absolutely. And so I'll clarify this. I do know a person that's solely a financial coach. That is for situations, let's just say, where a person just doesn't have money, they have debt, and they need to get out of it. What'll happen is I'll send that person to the financial coach, and then they'll come back to me as they build a portfolio and we want to do stuff with it. Mm-hmm. With regards to what I do, it is full-on financial coaching with financial advisement. So we want to make sure that we're looking at every bucket of money. We're looking at what you want to accomplish. We want to look at what debt we want to pay off first. All of that matters. So there's good debt and there's bad debt. As we know with real estate, there's leverage there. So, if you're leveraging real estate, that just means you can build a bigger portfolio faster, and you happen to have some notes out there. But in terms of full-on financial coaching, yeah, it's a part of what we do, and we're going to reach you on all levels of planning.
Oh, it'd be nice to have somebody you can bounce these ideas off. You may go down to Florida and you get to Fort Myers and you find the perfect condo and you go, oh, I love it here. I just love it here. Do you want to buy it? Do you want to lease it? Do you want to do a timeshare? Do you not? Do you lease the car? Do you buy the car? All these different discussions need to take place when you're in retirement. And it's not like we're, hey, Mark, can I please do this? That's not what we're talking about. We're talking about getting all the data, get the information for you so you can make your best decision. Give us a call. Give us a look at our website. Let's set up a conversation about you and Mark and see if this is a good fit. Again, MoreToRetire.com is our website. You can go down to the bottom of the page there and fill out a little information. Mark will get back to you. Or you can call us at 984-300-1984 and set up a meeting with Mark to go through the pros and the cons, the ups and the downs, the worries that you have about your retirement. And Mark, we have time here. You have an event coming up on May the 31st with an author that you know, and people can actually see the office, come by, meet you, get a book. Tell me about that.
It's fantastic. So great friend of mine, his name's Dennis Lindsay. He wrote a book, The Lens of the Father. The Lens of the Father is on Amazon, so you can order it ahead of time. It's a 100-page read. It's easy to read, and it's fantastic. What I want to do is let you know this is an easy way for you to meet me and meet Dennis Lindsay, my good friend. So it'll be May 31st, Saturday, May 31st, from 10 to 12, 10 a.m. to 12 p.m. It'll be floating, and we'll all exchange numbers and have a great time. I'd love to get to meet you. We'll have some refreshments down here as well. So May 31st, 10 to 12, The Lens of the Father, Dennis Lindsay, Mark Osler, here at 919 Kildare Farm Road, Suite 1-B, 919 Kildare Farm Road, Suite 1-B.
Love to have the opportunity to meet you, your retirement concerns, have some great conversation, and just kind of kick the tires on Mark and find out if he's a good fit for you and helping you in your retirement years. Here we go. MoreToRetire.com is our website. Again, MoreToRetire.com or 984-300-1984. We thank you so much for listening today, and we hope you have a great weekend, and we'll be here again next week on the Mark Osler Retirement Experience.
Insurance products are offered through the insurance business Mark Osler Retirement Experience. Mark Osler Retirement Experience is also an investment advisory practice that offers products and services through Impact Partnership Wealth LLC, a registered investment advisor. IPW does not offer insurance products. The insurance products offered by Mark Osler Retirement Experience are not subject to investment advisor requirements. Investing involves risks, including the potential loss of principal. Any references to protection, safety, or lifetime income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims-paying ability of the issuing carrier. This radio podcast is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be considered as advice designed to meet the particular needs of an individual situation. Mark Osler Retirement Experience is not permitted to offer, and no statement made during the show shall constitute legal or tax advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein are provided by third parties that have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by Mark Osler Retirement Experience. Market Guard is a firm that provides investment signals as well as portfolio allocation recommendations for a wide variety of model portfolios. Market Guard does not offer advice or enter into fiduciary relationships. Please remember that converting an employer plan account to a Roth IRA is a taxable event. Increased taxable income from the Roth IRA conversion may have several consequences. Be sure to consult with a qualified tax advisor before making any decisions regarding your IRA.